Hello, welcome once again to Profitable Forex Trader. Today, we're going to start a series called How to Be a Profitable Forex Trader. I'm sure almost all Forex traders want to be profitable. Nobody wants to lose, right? There are so many people that have gotten in touch with me and they've asked questions and they say that I have blown a lot of accounts, I've lost a lot of money, what can I do to be profitable consistently? And this is one of the reasons I decided to do start this series to show us things that we were not doing before. There's no forex trader that I've not lost any money. I have lost a lot of money. It's one of the story to success in forex trading. You must lose. It's something that you should accept as a forex trader. It's part of the journey to success. So we have lost a lot of money and we learned a lot from that. All right. So you must also learn a lot of lessons from what you have lost. All right. So I decided to start this series, to be able to, so as to help us, those of us that want to be successful forex trader. This is for you. Please do not miss out on any of these series. Do not miss out on any of the series. If you follow this series to the end, if you watch all the other series after this one to the end, I'm sure you are going to become a profitable forex trader. Now, I also want to say that to be a profitable forex trader is not an easy thing. You need to be hardworking. There's no business in the world, there's no successful business in the world today that did not work hard. They all work hard and smart. All right. So forex trading is not an exception. To be a forex trader, you need to put in more time. You need to work hard. You need to sacrifice a lot of time. You need to get knowledge because there's no way you can be profitable in forex without knowledge. And it's the fact that some of us that tend to have this knowledge, but we do not apply the knowledge that we have, and there are reasons for that. So as time goes on, you will know the reasons why many of us that have the knowledge of forex, but application is so difficult. In fact, there was a lady that said that after she went through forex training, she spent several months, you know, learning how to trade forex. But after she graduated, she didn't even know how to place a trade. All right. So, but with this series, I'm not going to rush. Please, I don't want to rush this. I want to take it step by step. All right. So as to help you to be a profitable forex trader. There are rules to follow. If you don't follow the rules, you will never be a profitable forex trader. All right. So I'm going to start with candlesticks analysis. Candlestick analysis is very, very important. It is very, very important. You cannot skip this part at all. Right? We need to understand each candlestick. The prices in the charts are being represented by candlesticks. So to profit with forex, you need to understand how to analyze each candlestick formation. You need to understand because there are some factors, there are some things behind the scene, that affect the formation of each candlesticks. As each candlesticks are formed, depending on the time frame you're using, it gives you the information about what is happening in the market presently, what had happened in the past, and what is going to happen in the future. So understanding the formation of candlestick is very, very key. In fact, professional traders read candlesticks a lot. They read candlestick a lot. They analyze what is happening in the market based on the formation of these candlesticks in order to predict what the price is going. Of course, it is not only analysis of the candlestick, there are other factors as well that you look at. But candlestick analysis is very, very important. So you need to understand how to analyze this candlestick properly in order to interpret the story behind the formation of each candlestick. All right. So we're going to start off with this. Like I said, I don't want to rush this because it's very, very important based on questions that people have asked me. And that is why I am coming out with this so that you can be consistently trading and making profits. All right. So I'm going to start with this. This is a called candlestick, and this is also called a candlestick. All right. Now you need to understand this. Get it in your mind that this is a candlestick. And this candlestick is called bullish candlestick. Bullish candlestick, meaning it represents the buyers. These candlesticks represent the buyers. Now, the color of the candlesticks does not really matter. What matters is the formation of it. Now, as it is in many charts anyway, this bullish candlesticks color is represented by color green. All right, but there are some charts that which will not be green. It could be white or black or whatever color that the trader decides to change this bullish candlestick to. All right, but it is for this tutorial. It is green. All right. Why this is bullish candlestick, which means these representing the sellers. The bearish candlestick represents the sellers. In the forex market, there are two participants: the buyers and the sellers, the bulls and the bears. The bulls are the one that buys, while the bears are the one that sells. The bulls buy at a lower price and sell at a higher price. The bear sells at a higher price and then buy it back at the lower price. All right. Now, a very quick one. Now, for a bullish candlestick, the price starts, it opens at this level. It opens below at this level. All right. This is where it opens and then it closes here. It opens here and then it closes here. But after it opens and closes, that certain thing had happened. All right. Now, when it opened here, the sellers push the price down to this point. All right. The sellers push the price from here to this point. And when it got to this point, the buyers came into the market and pushed the price up to this point, this higher. All right. The sellers came into the market again and pushed it down. And eventually the price closed at this point. All right. It opened here. The price opened here, came down a little bit, went back up, came down again and closed here. Now, depending on the time frame that you're using, let's assume this is a 1 hour candlestick, meaning it takes 1 hour for one candlestick to finish forming. That different candlesticks and a different time frame. It could be 5 minutes, it could be 10 minutes, it could be 15 minutes, it could be 30 minutes, it could be 1 hour, it could be 4 hours, it could be daily candlestick. So depending on the kind of trader that you are, and depending on the time frame that you trade, all right. But for the purpose of the tutorial, this is 1 hour candlesticks. So what this is telling us is that it took 1 hour for this candlestick to form. 1 hour. All right. So the price, it opened at this price, came down a little, went back up, came down a little, and then closed at this point. All right. So from this open to this close point is called the body of the candlestick. The body, B-O-D-Y, the body of the candlestick. Why this is the wick? It's called the wick. Like, every candle has a wick. So this is a wick of the candle, and this is a wick of the candle. Why from the open to the close is called the entire body of the candlestick. All right. While from this wick here down through the body to this wick here, it called the entire range of the candlestick. The range. This is the range or the entire area of this candlestick. From this point to this point. All right. Okay, so that's for a bullish candlestick. Remember, the bullish candlestick always starts below and closes up. The bulls, the buyers, they buy here and they sell up here. Now, for a bearish candlestick or sellers, all right, the price usually opens at the top and closes at the bottom. Now, what's the rationale behind this candlestick? All right. Now, when the price opened here, maybe it came down a little bit and then the buyers push it up again to this point. When it got to this point, the sellers pushed the price down to this point. Then the buyers entered the market again and pushed the price down to this point, and then it closed here. Again, the sellers, the price opened here. The sellers pushed the price down. Perhaps when coming down, the buyers entered the market and pushed the price up. Or immediately the price opened, the buyers pushed the price here. All right. Then when it got here, the sellers came in and pushed the price down to this point. Then when it got to this point, the buyers came in again and pushed the price, and then it closed here. All right. So it opened here and closed here. All right. Again, the bearish or the sellers, they sell at this point. They enter the market up here, and then they buy here back, and it closes here. All right. Again, from the open to the close is the body of the candlestick. This is the body of the candlestick. From this open price to this closing price is the body. While this wick, this high wick and this low wick, all right, this is the high wick and this is the low wick. So from this wick down to this wick here, inclusive of the body, is called the entire range of the candlestick, or the entire area of this candlestick. All right. So again, the buyers buy buyers buy here and close here, buy at the bottom and then sell up. While the sellers, they sell at the top and then they buy it back at the bottom. All right. So if you understand the concept behind this candlestick, then it's going to help you to predict at least more than 50% where the price is going after 1 hour. Like I said, let's assume this is a 1 hour chart. So after 1 hour, you can have a fair knowledge as to where the price is going next. All right. So this is just a brief analysis of this particular candlesticks. Now, there are other types of candlestick formation which we are going to look. We're going to look at one today, but subsequently we're going to look at others. Like I said, I don't want to rush this because it's very, very important. All right. And I also want you to go through it over and over again, because you cannot be a successful Forex trader without understanding candlestick analysis. You must know how to read every candlestick and how to analyze it very well. All right. So we're going to look at the next candlestick formation. So we can see that this candlestick is very big. It's big, right? These two candlesticks, the bullish candlestick and the bearish candlestick, they are very big. But here we can see that these candlesticks are small, smaller than the previous ones. And there are reasons for this, which if you have a good understanding as to why this candlestick is small, if you understand it very well, it's going to help you to trade profitably. All right. So this candlestick is called pin bar. Pin bar. No, it looks like a pin, right? This Taylor's pin looks like a pin. All right. So that's why it's called pin bar. Now, this is a bearish pin bar, and this is the bullish pin bar. In other words, this is buyer's pin bar and this is seller's pin bar. When you see the formation of this candlestick on a particular structure, on a particular support or resistance level, it is a signal, a very good signal that has been sent to you as to what is happening in the Forex market. And if it's part of your trading system, you could take a trade, based on the formation of this candlestick at a particular structure. You need to have a trading system. We are not going to talk about the trading system now, but later on we're going to talk about it. All right. So what is the psychology behind the formation of this candlestick? All right. Let me start with the bullish candlestick. Now, like I said previously, I said for a bullish candlestick, all right, the price starts at the bottom. All right, starts at the bottom, like I showed you here. The price starts at the bottom and then closes at the top. Okay, so this price started here, right at the bottom here. This price opened here. All right. Now, when it opened, what happened? The sellers, perhaps when it opened, the price went up a little bit. All right. or immediately the price opened at this point, the sellers came into the market and pushed the price down. All right, push the price down. Now we can see, like I said previously, that this is the wick of the candlestick, but the wick is long. Why is the wick long? The wick is long because when the price opened here, the sellers came in and then pushed the price here. All right. So when the price got to this point, the sellers at this point became, the buyers at this point became stronger than the sellers. So the buyers pushed the price up again, leaving a shadow. This is a wick, or we call it a shadow, leaving a shadow, telling us that the price had gone down to this point. Right? That's the reason. It's telling us that the price actually got down, came down to this point, and when it got down here, the buyers pushed the price up again to this up wick. Now, when the price got to this wick, the sellers came in, pushed the price down a little bit, and then it closed here. All right, that is the bullish candlestick. It opened here, came down a little bit, went back up to this point, came down and then closed here. So it opened at this price and then closed at this point. Now, because of the formation of this candlestick, because of the wick that is long, it's telling us here that the buyers are stronger than the sellers. That's the information given to us here. Like I said, that the formation of every candlestick is giving us information as to what is happening in the market, and with the information that this is given to us, we can predict what is going to happen next. We can predict where the price is going next. Now look at this. If the buyers are stronger than the sellers here, like I said, let's assume this is a 1 hour chart. Let's assume now that for 1 hour the buyers are stronger than the sellers, given by this week, this long week. It tells us that in the next 1 hour, what will happen? The buyers may also be stronger than the sellers in the next 1 hour. And that's why those people that are trading using pin bar, subsequently, I'm going to show us how to trade using pin bar. Those people that are trading pin bar, a pin bar is part of a trading system. When you see this, when this appears, all right, if it's part of a trading system, the next candle that will appear, you have to wait for a particular signal before you can enter a trade. All right, but this is a good signal given to us, telling us that for 1 hour, the bulls were stronger than the bears. So, in the next 1 hour, what do you think is going to happen next? The bulls could also be stronger than the bears. The buyers could also be stronger than the sellers. All right, so you can see the information given to us here just by the formation of this candlestick. The same thing here, it is the same thing. Also, I think we should don't make the mistakes of looking at the color of the candlestick. The color of the candlestick here does not matter. It is the formation of the candlestick that's of importance now. Now, like I said, now this is a bullish candlestick. You can see that previously I showed you a green color. All right. You can decide to change the bullish candlestick to blue, to green. I mean, to blue, to green, to white, to black, whatever color you want it to be. All right. But this one, you can see that it is white and this is black. So the color does not really matter. It is the candlestick itself, the formation of the candlestick that matters. All right. So that's for a bullish candlestick. All right. Now we'll go to the bearish candlestick, or the sellers. All right. The same scenario here. Like I said previously, that for a bearish candlestick, the price opens at the top and then closes at the bottom. All right. So for this bearish candlestick, the price opened here and then closed here. It opened here, and when the price opened here, the buyers came into the market and pushed the price up here. When it got here, the sellers became stronger at that point and pushed the price down to this point. When it got here, the buyers came into the market as well, entered, and then the price closed at this point. And again, this shadow here, or this wick here, is telling us that the price got to this place. The bulls pushed the price to this point, but the bears, the sellers, became stronger than the buyers, and so the sellers pushed the price and then it closed here. All right. Now, again, let's assume this is 1 hour candlestick. So we can see that for 1 hour, the sellers, the bears, were stronger than the buyers. Now, if for 1 hour, the bears were stronger than the bulls, the sellers were stronger than the buyers, what do you think is going to happen in the next 1 hour? There's every probability, 70% chance that the price is going to continue to go down. Not 100%, but it's giving us the idea that the price could continue to go down, given to the formation of this candlestick. Because that's what this candlestick is telling us. For 1 hour, the sellers, right, were stronger than the buyers. If it's a daily chart, for one day, the sellers were stronger than the buyers. So it's telling us now that the next day there's every probability, 70% chance that the sellers could also be stronger than the buyers. All right. So I hope you understand what is happening here. I hope you understand what I just explained to you. Right? This is the bullish pin bar, and this is the bearish pin bar. Now, if you see this appear on the chart, particularly if it appears on a support, a strong support, and a strong resistance, all right, it's very reliable. But if it doesn't appear on a strong support or a strong resistance or on a trend, or the trend support and resistance and all that, it might not be reliable. But if it appears on a strong support and on a strong resistance, it is very, very reliable. That's why Pimba is a very, very important candlestick formation that will help us to trade profitably if we know how to use it. All right. Okay, so the next chart, now we can see this on this chart. Now this is the bearish pin bar, all right, and this is the bullish pin bar, all right. Now for this bearish pin bar, you can see what happened there. The price was actually going up, all right. So when it got to a particular structure here, got to this structure, the price got to this point, and the sellers, after 1 hour, within the 1 hour, price was going up and down, up and down. But after the close of 1 hour, we can see that the price closed here. And this wick or shadow is very long, telling us that the sellers are stronger than the buyers. All right, so the next 1 hour, we can see what happened here, exactly as analyzed, exactly as what this pin bar told us. So the next 1 hour, the sellers push the price down. So if you are taking a trade here, in the next 1 hour, you can imagine how much you would have made, depending anyway on the lot size you're using. Right. So on the bullish side, the price was actually coming down. The sellers are pushing the price down. All right. The bears are pushing the price down. When they got to a particular support zone, remember this one got to a resistance zone, all right, strong zone. And when this showed up, it reverses. Now, the sellers push the price to this zone or to this area, and after 1 hour, the next hour, we saw what happened. The price opened here, the sellers push the price down, the buyers push the price up again, and then it closed here. So with the formation of this week, with the formation of this week, and see how long it is. It's telling us that for 1 hour, the buyers were stronger, or for one day, the buyers were stronger. So it's expected that the next 1 hour, next day, the price is going to continue to go up. All right. So I'm not going to show us today how to trade this. When we are looking at risk management, then I'm going to show us how to trade pin bars. All right, and where to put our stop loss and take profit. All right, but for now, I'm just going to analyze this candlestick for us and give us understanding on why they are formed and how we can really use it to trade and make profit. All right, so that's the psychology behind the formation of this pin bar. Pin bar is very, very important to every forex trader. If you're a forex trader, you don't know what pin bar is, I think you've not started trading yet. So pin bar is very, very important. It gives give us an edge in the forex market. So we can see that after this happened 1 hour, the next 1 hour, the price just keeps going up. All right. If you are taking your trade here, you would have made a lot of profit, depending on the lot size you are using. All right. So That is how it is. So today I'm going to stop here. There are other candlestick formation we are going to look at. There's so many of them. All right. Now there is doji. We are looking at doji. There's also doji, but we're not looking at doji today. All right. There are other ones like bullish engulfing and bearish engulfing. All right. There is morning star and evening star. There is three white soldiers, three white crows. There is bullish harami, bearish harami, and all that. Right. For today, I'm going to stop here. This pimba. All right, pimba. I'm going to stop at this pimba. And I hope that this was informative. Please please just be patient. I don't want to rush because it's very very long, and to be a profitable forex trader you need to sacrifice your time. You need to learn very well. To roll the road to success is not an easy road to go through. You need to be patient to learn everything that you need to learn. So in my next series, I want us to look at another candlestick pattern, another candlestick formation. All right, so we're going to do it like that, gradually until we finish up this series on how to be a profitable forex trader. So I'm going to end it here, and I want to believe that this has been informative. If you have any questions, you can ask. If you have any comment, you can comment, and by God's grace, I'm going to answer your questions and comments to I'm going to respond to every of your comments. Also, please do not forget to like this video and subscribe. If you subscribe, when the next series is being uploaded, you are going to be one of the first to get it. All right, so don't forget to subscribe and to like this video. All right, I wish you all a profitable forex trading. Shalom.